Welcome back to Real Estate 101. Today we're going to continue our discussion on mortgage financing and talk a little bit about reverse mortgages. And I'm pleased to be joined by Tracy Brock of Dominion Lending Centers and Sean Russell of Home Equity Bank. Tracy, welcome back to the show.
Thank you, Joe.
Sean, welcome. Thanks for joining us.
Thank you very much.
All right. So Tracy, Sean, what exactly is a reverse mortgage?
Well, a reverse mortgage is a fancy way of saying that we're allowing clients to access the equity in their homes. They've got to be over the age of 55.
Okay.
We're providing them an opportunity where we lend them money, and they're making no payments. So it's a great product for somebody that is tight for cash flow.
So this is just for seniors?
This is just for seniors. 55 is the minimum age.
All right. So how exactly does it work?
Well, essentially what happens is when a client says they're interested in this reverse mortgage, we are going to run them through the process, which starts by taking an appraisal of their home. So we need to find the actual value of their home. And then we're going to provide them what we call a loan to value. And the loan to value is based on three factors: their age, the location of their home, and the type of home. And we go up to a maximum of 55%.
Okay.
Once we determine that amount, we then move forward with the process and get that money funded to the client.
The one thing to remember is that your age does determine how much money you can take out of your home.
Oh, it does?
Yeah, it does. So it's not going to just be that you're 55 and you can get 55% out of your home and use that money how you see fit to use it. It is at 55, you won't get as high a percentage out of your home than somebody who's maybe 80.
Okay.
That's a great point, Tracy. And bear in mind, we do little business with people that are 55, even though that's our minimum age. Most of the clients I work with in my territory are over the age of 65 years old, because the younger you are, the less loan to value you qualify for.
Oh. I would have thought it was the reverse.
No, the older you are, the closer you are. Unfortunately, this is going to sound a little morbid, the closer you are to death, and therefore there's less time involved with that loan. When you're 55, the likelihood is you're going to live to the age of 85 plus,
right.
And that's a long time to be holding a loan product with no payments.
Yeah, you have to keep in mind the interest is still being charged, right? So you don't want to get to the point where you're in a negative amortization because
it's a long period of time.
Because you're still alive, right? It sounds terrible, but yeah.
Right. Okay, so how exactly does it compare, or are there any comparisons to a home equity line of credit?
We get asked this question often, and there is some similarities, but I'll explain some of the differences. With a home equity line of credit, you're typically obtaining that product from a bank.
Right.
And at a bank, you're going to have to qualify based on some income levels, and you're going to have to go through their total debt service ratio and their gross debt service ratios, both of which we don't have on our product. Mm-hmm. And therefore, a senior is going to have to go through that rigorous process and likely not qualify. So in fact, I actually get a lot of referrals from the banks for that very reason.
For the people that they can't
qualify at a traditional bank.
Like the HELOC has payments too, where the
Correct.
reverse mortgage doesn't, right? So it's very different from a HELOC in that fashion, because you are essentially with a HELOC, you're taking money out when you need it, but you have to pay that money back, and there's expectation every month to make a payment towards that. With the home equity reverse mortgage, there is no obligation to make payments on a monthly basis.
Okay, and is credit, does that come into play here?
With our company, credit's not a factor. So we're not declining or approving a file based on a client's credit level.
Really?
The regulators do ask us to have a credit bureau with our files, but that's simply to ensure they have enough money to pay for property taxes and home insurance. But we're definitely not declining or approving a file based on their credit.
Okay, so when using this type of product, these reverse mortgages, does the bank own the home?
That's a very large misconception, and the answer is no. We do not own the home. We're a charge on title as any typical mortgage.
Yeah,
so there's a lien.
There's a lien.
There's a lien on the property, but the client can sell their home at any point in time they like.
And they pay the lien, and the lien's lifted.
Pay what they owe us, and that's it. Then we're off title.
It's the same as like any mortgage, really. It's as owned as much as the amount of the loan is, right?
Right.
So.
All right. So why do you think reverse mortgages have such a bad connotation with them?
Well, there's really two reasons that I come across in my travels with this. Number one is education. A lot of what I do is educating the mortgage broker field, the banker field, the individual clients about what our product really is the misconnection or connection to the U.S. marketplace. We are the only provider of reverse mortgages in Canada, but there's hundreds in the U.S. And those products are very different than ours, and there's no connection to our product. And so people read online, they get information from others on these U.S. products and associate those negatives to our product.
To our Canadian products.
Correct.
I also think too that in where I see some resistance when I try to present this to people is they really have this preconception that they have to leave money to their children.
Right.
And even if it's at their own demise, like I have a friend of mine whose parents definitely could take a reverse mortgage out and do all the things that they need to do with their personal lives, but it's almost taboo because that would mean they have a mortgage on their home again.
Right.
And that conception that you have to be mortgage free at that age, sometimes just they can't get past that.
It's so true. I see it on a regular basis, and that comes back to spending the time. It's what I need to do in my role is educate people on it's okay to do that. It's okay to take care of yourself. And in fact, you're still going to have equity left in your home with our product. So you can take care of yourself and still have money to leave to your beneficiaries.
I think part of it too, I mean, I don't think there's a lot of information available out there on reverse mortgages. It's not exactly a product that you hear about every single day. So maybe you're right. Maybe it does need more education on the product for people who may not even know they need it.
Agreed. And we definitely have to educate on that. And folks like Tracy in her role, they're doing a great job with bringing this to many more thousands of people in the mortgage broker space to say, this is a viable option for you.
Right.
Yeah. I think that honestly, it's sometimes they just, to their own demise, don't really want to move forward in it. So it's just letting them realize that there's still equity there. There's still things you can
It's an
do
option.
with it. Mm-hmm. Yeah. You can take the money out to put into an investment to give you a monthly income.
Right.
You know what I mean? So you're just switching your investments from one investment to another, one that sits there and does nothing for you to one that's going to give you a monthly dividend.
All right. And you're still paying back what you owe.
Yeah.
Very true.
All right. So let's talk about some of these misconceptions. What are they?
The first one we addressed a little earlier, which it has to do with the bank owns your home.
Okay.
We don't own the home, and many people come to us with that. And it's like a traditional mortgage product where we're a lien against the home, and the client could sell their home at any point in time. The single biggest misconception I get in my travels on a daily basis is this: Sean, I love the concept, love the product, but I'm fearful there's going to be nothing left in my home after 15 or 20 years to give to my kids.
Right.
That is by far the biggest misconception, because what people fail to realize is that the entire value of their home is growing at some rate.
Of course.
We don't know what that rate is.
Right.
We use 3% in our calculations or our illustrations, but the home is growing. So you have a reverse mortgage that you're making no payments on, which is growing. Clients get that, but their home value is also growing.
The appreciation.
So the appreciation in the home. So after 15 years, yeah, you've eaten away a little bit of your equity, but there's still lots there for your beneficiaries.
All right. So what's the number one thing that you're finding people are most worried about when discussing reverse mortgages?
There's really two, and they kind of go hand in hand. The first one is, Tracy alluded to earlier, is kids getting involved with the process and saying, Mom or Dad, you shouldn't do this because this is not a great idea. It's going to eat all your equity. What they're really saying is, Mom and Dad, you're taking our inheritance away.
Right.
So that's the number one thing that we get. And the second is the fact that they're fearful there's going to be nothing left in the home in terms of equity, which we definitely show them through illustrations that there will be plenty.
All right. So why don't you tell us a little bit about Home Equity Bank?
Great. We've been in business now for 30 years. We were founded out in BC, celebrating our 30th anniversary this year. We've had various formations of ownership along the way. We've been a publicly traded company. We're now owned by a private equity firm.
Okay.
We changed our name in 2009 to Home Equity Bank because we became a Schedule I bank at that point in time.
What was it before?
It was CHIP.
Oh.
CHIP Reverse Mortgage. Now, we still use that branding in our advertising and our commercials, but we felt that being a Schedule I bank, we should change it to Home Equity Bank, but people still know us as CHIP, which stands for Canadian Home Income Plan.
Right. Okay. All right. So are reverse mortgages just for clients that have a lot of debt?
No, I don't think so. I alluded to that earlier. You could use a CHIP reverse mortgage to take on an investment to earn a monthly dividend income.
Right.
They're for people who Maybe they want to take money out for investments. Maybe they want to take money out for their children or their children's children. Maybe they want to take a trip around the world.
I was going to say, is there a stipulation when you take the money out on what it has to be used on?
No, as long as we have declaration from the client what their intentions are for it, we're fine with that. However, if they do have secured debt against the home, as a company, we have to be in first position. So we'd have to pay out any existing mortgage or secured lines that they already have in place.
Yeah, or if there was collections or anything like that. But, basically, if they want to do renovations to their home, maybe they want to put in a basement apartment so that they can start generating a small income from a basement apartment.
Right.
It's really limitless.
It's a great point you make, Tracy. And we have some stats on the clients we work with. 91% of our clients tell us they want to age in place. In other words, they want to stay in their home until they pass away.
Right.
And in doing so, you're going to have some things that come up with the house, like a new roof is needed,
Absolutely.
some renovations. So these are folks that want to stay in their home and they're going to need money to maintain that home.
Or even home health care. You can take the money
Correct.
out to have a full-time nurse in your home if you wanted to.
Really?
Yeah.
All right. So what does the reverse mortgage industry growth look like year over year?
We've seen some really incredible growth, Joe, over the last little while. Each of the last 2 years, we've grown over 20%. We're anticipating similar growth this year or more and into the foreseeable future. And there's a few factors in play here. One, we're just at the cusp of baby boomers
I was just going to say that.
hitting retirement. So we've got some demographic trends in our favor. I'm just going to provide some stats for you. Right now, there's 7 million plus Canadians over the age of 60 in Canada.
Really?
It's the fastest growing segment of the Canadian population. An interesting stat we like to use, for a 65-year-old couple, there's a 50% chance that one of the two of them will live to the age of 92.
Wow.
That's important because we're getting knocks on our door when they're 75 years old, these clients saying, we've run out of our investments. All we have left is this wonderful home that's worth $1.2 million in Mississauga.
We want
to tap some of the equity out of that. The difficult demographics we're finding, which also play into favor for our product, are that clients or seniors are taking debt into retirement, and they're also taking on new debt in retirement. So for those factors as well, we're seeing a lot of demand in our product.
Well, I mean, the baby boomers, right? That in itself alone is, over the next 10 years is going to be huge for you guys.
100%. So we're very pleased to see that we've got a product that helps seniors and that we're going to continue to grow as a company.
All right. So let's say, God forbid, one of the spouses passes away. What happens?
In that event, the surviving spouse stays in the home until they pass away. Still keeping the reverse mortgage in place. We're not forcing anybody out of their home at any point in time. So if a couple takes on our product, it's until the last surviving spouse passes away.
So nobody has to be forced out of their home. The whole premise of the product is to allow the people to age in their home as they want to, when they're ready to move, when they're ready to sell, or when they're ready to move into some type of secondary living home.
All right.
Then that's a different story. That's at that point the mortgage has to be paid.
Has to be paid, right?
Yeah, I can't have the grandson who's been living in the basement still keep living in the basement when the grandma goes to her old age home.
Right.
I hate using that. My mom says that's terrible. Trying really hard to figure out another word, but
right. So what are some of the trends that you're seeing?
One of the biggest trends that we're seeing in the last 8 months in our company is individuals looking to take out a reverse mortgage to help their kids or grandkids purchase their first home, to provide them with a down payment. Tracy, as you know, it's one of the most difficult things, I think, for people looking to buy a home.
Yeah.
Is coming up with that cash.
And it also helps with the whole concept of not leaving any money to their children, right? If they can do it beforehand, it gives them more sense of ease. So if they can take a reverse mortgage out for, let's say, $250,000, they give 50 to this person, 50 to this person. Now they have $150,000 to manage for the next 5 to 10 years. And, maybe it's something that is easier for them to manage and also justify taking the money out to do the reverse mortgage.
Right. And they're helping their kids at the same time.
And they're helping the kids. That's what I mean. It's kind of twofold. I'm helping you, but I'm also helping myself too.
Right. Indeed. It's something that I can put into perspective with an example we had recently. I met with a wonderful woman, 88 years old in Etobicoke, that wanted to take out a reverse mortgage to give each of her 4 grandkids $100,000 each. Mm-hmm. So her home was valued at about $1.2 million, and she took $400 of that to give each of them $100,000 to put on their home, and that her grandkids were all in their 20s. And she was super healthy. she, like I said, 88 years old, and she looked probably 70. And God willing, she lives another 20 years. She wanted to enjoy that living inheritance
In life,
and
yeah.
see her grandkids buy their first homes.
Yeah.
All right. So how does home equity get a return on this financial product? How do they make their money?
That's a great question. There's really three ways that we get a return. I mentioned earlier that over 90% of our clients want to age in place. So typically we get paid back when somebody passes away. That's the one way we get paid back. They pass away, the estate settles all their affairs, and we get paid back.
And you get paid.
We get paid. Number two is, let's take, for example, a 75-year-old widow that takes out a reverse mortgage, and unfortunately she falls ill and has to go into a full-time care facility. They're going to inevitably have to sell the home. We're going to be paid back at that point in time. And the third way is if somebody takes out a reverse mortgage and decides at some point in the near future they're going to sell their home, and they do, they pay us back after they sell their home.
Yeah. So that's a nicer way of saying old age home. Thank you.
Right. So there may not, there isn't necessarily any upfront fees here.
There are some fees with the product, and I can explain those for you.
Right.
The first one being the interest rate that we charge. Like any mortgage or lending product would have an interest rate, we also have an interest
Right.
rate. In addition to that, there's really three main fees for the product. Number one, somebody says, Sean, I love this. Let's move forward. We're going to order an appraisal for the home. The
Right.
client's going to pay out of pocket for that appraisal.
Right. Which is appraisal is common when you're doing a mortgage
Absolutely.
nowadays today anyway.
Yeah.
So not uncommon. They get it. They
Right.
understand it. We need a valuation on the home to do this.
To what it's
product.
worth, yeah.
Of course. Number two is we have a product fee. As any product in the marketplace has a fee associated with it, our fee is $1,495. That's a flat fee, same for everybody. Anybody, you take out our reverse mortgage, you're
Regardless
going
of age or where you are.
regardless of age or where you are. Now, the great thing about that fee is it's not out of pocket. So we're adding that to the reverse mortgage
I was just
amount.
going to say that.
Yeah, so the client's not forced with coming up with $1,500 in that case. Then the last fee, Joe, is ILA. And all that is independent legal advice. All of our clients have to have a lawyer because it's obviously a very
Complex product.
It's a complex product. We're dealing with seniors. We want to make sure that everything's in place for them. And that cost is about $500, what we find for that fee, also added to the reverse mortgage.
Right. Well, it makes sense for them to
Yeah.
have it, right?
But they also too they have to have the lawyer as well to register the title as well. So the fees are a little bit higher than just the ILA because the ILA is really a separate fee on itself. It's still registering a mortgage on title. So there are all the things that come along with that, title insurance, registration,
Right.
and the paperwork that the lawyer has to
And
process.
you need a lawyer for that.
Yeah, absolutely. Absolutely.
Okay, great. So, Sean, if for people watching and listening, they may want to get in touch with you, how can they reach you?
They can reach me through Tracy. We have a fantastic relationship with DLC, and Tracy offers our products and services, and she can certainly bring me into the fold where needed. But I would suggest probably reaching out to Tracy.
Tracy, how do they reach you?
They call me at 416-788-6207 or tracybrock.ca.
All right, Tracy, Sean, great stuff. Thanks for coming on today's show.
Thank you very much, Joe.
You're very welcome.
So there you have it. If you're looking for more information on reverse mortgages, get in contact with Tracy Brock of Dominion Lending Centers. Don't forget to subscribe to our YouTube channel, like, comment, and share our videos. I'm Joe. Thanks for watching, and we'll see you next time.